Okay, welcome. We're going to do a quick video on support and resistance levels. Important thing to keep in mind, right? This is a basics guide to technical analysis. Let me just pop down the music here. So one of the key concepts, one of the core foundational things that we need to understand when we're trading is support and resistance levels. One of the most helpful things that we can have on our charts, in our thought process, is support and resistance. It gives us an idea about where buyers and sellers are operating. And so we're just going to cover off in a quick video the ways that I use in order to assess my support and resistance levels. So we've got a very good example of one here on BNB. And something that I want to use as the first example in this. So let's dive in. This is the 4-hour time frame. Now when we're looking for support and resistance levels, what we're looking for is areas where the prices hold up, right? So it's held up from ascending further, or it's supported from dropping lower. Right? That's what we're looking for. So the resistance is always from the upside pushes, where we see a clear line of defense where the sellers aren't letting us pass through and the buyers may not have enough energy or funds to push price through. And the support is the opposite. The support is where the buyers are strong and the sellers either don't want to push price through, or the buyers are just too strong and they're sat comfortably in their positions. Now, support and resistance levels are key for understanding the overall direction of the market, certainly on higher time frames. What we can see here on BCH is, you can see in this area here, we've got 3 areas of resistance. Right, you've got one here, and then we've got this little one just in here. What we can see in each of these 3 occasions is this is where price has been halted. Right, we tap into this level here at 600 and we sell off. We get back to this level at 600, we sell off. We get back to this level at 600, we hang around and we break through. So when we're looking at identifying support and resistance levels, what we're looking for is number of touches. We want to see at least 3 touches. That's typically what we want to see. So in this example on BNB, what we can see here is 1 touch, 2 touches, 3rd touch in here, and then breakout. Now what we take from this example and what we take from support and resistance levels is that the greater the number of touches, usually the weaker the level becomes. So the more times a level has been touched, the more times it's been tapped into, the weaker it becomes. And the way that I use to analyze and discuss this, or give some background to it is, what you have to imagine is, let's imagine that this here is an apple tree. Right above us here, this is an apple tree. And what happens is we go up and we pick some apples off the tree here. All right, but now we've got enough apples and we have to come back and empty the basket. All right, then we go back up the apple tree and we take some more apples, but our basket's full again and we have to come back down and drop off the apples in our basket. And we go up again, but now by the time we go up again, we've already been up to the apple tree twice and we've already taken a huge number of apples off the apple tree. And by the time we come back to it for this 3rd time, there's no apples left here. And what we have to do is we have to go further up the tree. We have to climb higher to find the apples again. And it's a great way to think about resistance levels and why they become weaker. All right, so we run out of supply here. We run out of supply. We eventually get rid of all of that supply. There's no more apples left. We have to find new apples. And we do that by traveling higher, further up the tree, and we find new apples. We sell off again. Okay, so that's the way that we visualize the way that the market works around these resistance levels and the number of taps making it weaker, because we're essentially taking whatever the asset is out of the market, and when we do that enough, there's no sellers left, there's no apples left on the tree. We have to move elsewhere in order to find new sellers, new apples. Right? I hope that analogy makes sense. So the resistance level, very important, very key through here. Number of touches is important to us because the number of touches that we have signifies, number one, the legitimacy of the level, and secondly, how likely a breakthrough potentially is. So this example on BNB, 1, 2, 3 touches, breakthrough. Ideally, all of our resistances have around a 3-touch value for breaking out. We would certainly hope that our resistance levels would be near a breakout when we have 3 touches. Sometimes we can see resistance levels with 5, 6, 7 touches. But again, each one of those touches we anticipate will eventually lead to a breakout. One of the best ways that we can use to map resistance levels like this is turning on line. So if you're struggling to identify your support and resistance levels, utilize a line chart. It will make it a lot clearer for you to see those levels. Sometimes when we put the wicks up, it can be very, very difficult in order to see where the true levels are. You'll also notice that from this, I do a lot of my drawing of levels based on candle closes. I don't take into account wicks. That's important for me because I think one element of drawing support or resistance levels is acknowledging when we have a breakthrough. And by drawing to candle closes, it becomes obvious when we have a breakthrough or breakout of a level. So for me, this is very important why I draw it from the close. So you can see with BNB, for example, if I zoom in on this region, right, we didn't get any closes above this 600 level. We traded above it, traded above it, traded above it, but didn't close above it. All right, so that's why I always tend to draw from candle closes. You swap to a line, I get the same picture. Very clear. So the BNB level here, very, very nice. All right, very clean. Let's say on BNB, it's too clean to deviate away from. So after we have a resistance level and we have a breakout, the level usually acts as support. I think that's the rule. That's what happens. We talk about this in terms of flipping levels. So we flip a resistance level into a support level, and the support level becomes a new marker for the market in order to potentially become buyers at that point. And typically one of the reasons that that happens is because when we flip a level, we know there's been a lot of selling interest at that price point. So it gives us an opportunity to freeze out those sellers by not allowing us to drop any deeper. And it also sets a new market sort of fair value for us, in that we know that buyers were willing to buy at this price point, and therefore if it comes back down to this price point, we would expect to see demand kick back in. So really important to understand from that support resistance flip example, because what we know as well is if we lose a support level, if BNB is to come back underneath here, that would be a significant change in the market because we wouldn't expect that to happen, right? We've had 2 successful holds and we would not expect us to dip lower. And if we do, then something has changed. Your support and resistance levels can be drawn on any time frame. The most important thing that you have to do with support and resistance is ensure that they are valid. And what you are looking for is a horizontal level, a small rectangle, a line if you want to, that encapsulates a range of price data and that has multiple touches against it. That's what you're looking for, okay? Multiple touches and a range of price data that's covered. What you don't want to see in a support or resistance level is you don't want to see price action that you can convince yourself is resistance because it just goes like this very tightly and this is the only data you have for it. If this was super lower time frame, then maybe you could play a scalp on a breakthrough of a level like this. Aside from that, what you want is clear movement away and back to the level, right? So BNB again is a perfect example of this. Taps into this, moves away, comes back up, taps into it, but look at the distance between here. It's 11 days. 11 days passed before we got back to this level. We reject again, right? Reject here, 21st all the way to 29th. Another 8 days passes before we get back up to this level again. So that's what you want. You want these big sweeping touches of a support or resistance level. Now when I talk about this tight structure like this, now this price action here is fine if it comes at the end of one of these styles of structure. So if I take this back here, And if what we had at this point here on BNB is price action that went like this, this would be good for us because we're keeping up the pressure at the resistance level. I hope you see that. We're keeping pressure here. So what's happening in this situation is the buyers are saying, we're not dipping, you're eventually going to have to tap out, right? The sellers here, you're eventually going to have to tap out because we are not letting this drop and we're going to force this through this level. So when we have this tight back and forth underneath a resistance level that we have clear touches and bounces away from, this is where we can often anticipate a breakout. Because we see this nice tight consolidation under the resistance and we're looking for the power in the break above. This is something that happens quite regularly on the multiple time frames. So where we're looking for nice structure through, nice clean bounces away and back to the level, and then we can have consolidation underneath. So there's some of the tips for drawing support and resistance levels, right? If I can try and summarize now. You want to draw horizontal lines or rectangles. I like rectangles because I like to encapsulate a wider area of price, and I'm not so fussed about the distance that I'm covering in that. I think it's easier to map things out with a rectangle than it is a line, because the line is very fixed. It's very much a case of it has to be this point. Okay? If like I map out the 600 level on BNB, it has to be 600. Whereas if I just box it off, what I'm saying is basically it's got to be somewhere in this box region. Right, that's where I'm looking for it to hold and support. It's somewhere around this box region that I've drawn out. And for me, that's easier. You're looking for at least 3 touches or 2 touches and a breakout. Right? We can have multiple touches of a level. And like we said, we want to make sure that the more those levels are touched, the weaker we assume that they become. Now that applies for resistance and both support. So if we have a level that is producing weak bounces from support and is hitting into support multiple times, we can start potentially anticipating a breakdown in price. And the same analogy works from kind of the apples in the tree perspective, but we just flip it around. Right, so we're taking away the buyers. The sellers are forcing the buyers to continue to act, and eventually the buyers will step out the way and we'll lose a level. Right, so that happens on the flip side. So we're looking for multiple touches, at least 3 to confirm, but we can have a lot more than 3 to confirm. Or a lot more than 3 to have a resistance or a support level. Key thing as well, I know I'm summarizing, but this just came to mind. Key thing as well is, it's always resistance until it's not. It's always support until it's not. And what I mean by that is, in a bull market, sometimes people get nervous about trading at support or buying support because it's been tested maybe 3 times already. Now in that situation, remember what I've just said. It is still a support level until it's not. If we break down, then sure, you've got a decision to make on whether or not you sell. But until the point we actually get a breakdown, it is still a valid support level. Same with resistance, right? When we've got a resistance level, we don't necessarily always want to anticipate a breakout because it's resistance until it's not. It's resistance until it's broken through. So important to acknowledge that point as well. Support resistance levels flip. That's what we look for. We look for that in a bullish scenario and we look for it in a bearish scenario. So in BNB, we look for it in the bullish scenario of it breaks through the resistance, it retests the support. This is a great bullish structure. If this is to lose this level and retest underneath, we would have flipped the level back, right? From support into resistance. Whereas on the break up, it's resistance into support. On the breakdown, it's support into resistance. And so we always look for those flips, and they're one of the simplest plays that you can begin taking as newer traders, are these support and resistance flips. You're looking for the levels to be overcome, to be reclaimed, etc., and then you can start basing trades with sensible invalidation points around them. And what else did we cover off in this? Swap to line. Yeah, if you need to double check your levels or make sure they're legitimate, swap to line. The way that you draw a support and resistance level should look identical on a line chart to the way it does on a candle chart. So if you turn on a candle chart and you draw a level, and then you swap it to line, and it looks completely messed up and like it doesn't touch anything anymore, you might want to redraw your level. Okay. Support and resistance can be drawn on any time frame. Like I said, just make sure you've got the correct number of touches in there, and make sure you've got that nice sweeping motion between the resistance or the support touches. Any bounces on support or resistance, so bounces off support or away from resistance, we should hopefully see those getting we should look out if they are getting smaller, because they can give us an indication of which way the market's going to break. I've covered that, so I don't want to cover it again. I think that's pretty much everything that I have to say on an introduction to support and resistance. Just remember the key things, especially if you're new to trading them. Right, number of touches is most important. Most support and resistance should be immediately obvious to you as you are looking at a line chart. All right, most supports and resistances should be immediately obvious. So let's see if we can just get like maybe ETH or BTC in here, and we can just take a look through. Okay, let's see what we've got here. So we know we've got a couple on these. So we can see here on ETH, and we'll just leave it online as well, just for identification purposes. So we can see number one, we've got this area here on ETH. All right, where we've got 1, 2, 3 touches, big breakout, retest here. Right, and then we've got this area here. Right, through here on ETH, we've got 1 touch, 2 touch, 3 touch breakout, retest here, and push higher. So if we swap that back to candle, we'll see the impact of this. Right, so we can see the impact of this, and this is why the rectangles for me are so clean. Because what we have in this region is we say, okay, here's the resistance point, here's the breakout, here's the retest, no closes back below this level. This is great, perfect retest, bounce back up, we've got a new resistance here and here, breakout, retest here, retest again here, and then carry on higher. So you can see just very simply on a line chart, these support and resistance levels should be immediately obvious to you. Let's see if we got anything else, if we can just go to another chart and take a look. Got one on LTC. So we've got one through this region as well here. And this is going to be an interesting one. So we'll map this one out and then we'll take a look. Got anything else that's clean? Yeah, we can probably take down here as well, because this is an important one across the bottom. So another like super easy way of doing this is make sure you've got the crosshair on your cursor on TradingView and take it down. Right, so you can see this crosshair that I'm working with at the moment. So as you can see, as I'm rolling down price, I can see on the left and right where potentially my support and resistance is just by scrolling down. So I can see as I get to this point here on LTC, I can see on this side I've got the touch for support. I can see on this side I've got the touch as resistance. So you see the way I can just use the crosshair to try and identify where some of these levels will be without even having to draw anything. And then when I see them, then I can map it like this. Okay, then we'll come down again, nothing here, nothing here, and then potentially this level that we've got here. Okay, so we've got some important ones in this. Now let's turn candle back on and see how relevant these are. So this is an important part of checking the process is we've identified on line where we think they are. Now we're going to check on candle to make sure everything lines up. And what we can see is, we can see with this top one here, we've got a great area of support underneath here. Nice retest as resistance on the way down after the sell-off starts. And then we've got resistance, resistance, big breakout. Perfect, right? Good level for us. We can keep this on our chart, $90. We've got down at the lows, support here at 65. Resistance here on the retest. Big sell-off again. Resistance here. Breakout. Inability to hold. Bearish retest. Big sell-off. Retest, 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 breakout. And it's a very significant level down at 65 for LTC. Huge level for it. Okay. And then we've got this one up here, which I said was going to be the interesting one. Okay. So what we've got in LTC through here around this 240 region is a clear resistance point. And we know it's a resistance point because we've got 1 touch here, 2 touch here, and breakout here. Now we also had an attempt to try and get a touch here, which failed. Now what's interesting about this one is we dip down below here, which is awkward, because what you would typically want to do is you would want to place a buy on this position. You want to place a buy here with a stop loss underneath here, and then you want to start shooting for the next high up. Right, and unfortunately this is one of those sell-offs that was very, very strong. And when we have setups like this, right, like this here, we can't do anything about being stopped out. Right, we have to still take our stop loss in the place that we would, which is underneath here. Unfortunately, we get stopped out of this trade here, but we have to take the stop because at the time we don't know if it's going to do this. Right, it's only afterwards we can look and say, oh damn, that was a shame that I got stopped out, but we have no idea. In the moment, this could have done this, and in that case we'd be saying, well thank fuck I had a stop loss set. How we get back on board with this is we say, okay, shit, this was the important level, this was the important resistance, now this daily here has closed straight above that level again. So actually what I'm going to do is I'm going to take an entry now on this daily close. I'm going to have my stop loss underneath this candle, and now I'm going to ride this into a fresh high. Right, so once the level is reclaimed again, we can still take the position, we can move back into the original position that we had. But we can do that from a position of strength. We still have to have the invalidation. Remember, trading is all about essentially being stopped out when you're still potentially wrong, and making sure you're protecting your capital in those moments. Alright, so this turned into quite a long video, but I hope that it was helpful in terms of my thought process on thinking about support and resistance, mapping support and resistance out, and some tips and tricks that I use when I'm thinking about support and resistance. Any questions, please just let me know.